Limited, Adam Woolridge. Cobre Ltd is an ASX-listed company focused on the exploration and discovery of copper and new high-grade base metal projects in the Kalahari Copper Belt, Botswana. Here to tell us more about the company is CEO Adam Woolridge.
Thank you. Fantastic. Well, that short video really sums up our company vision and highlights the need for new copper projects. What I'm going to talk about today are Botswana copper projects, and I'm really going to dive into that, and this will be the focus of this presentation today. Before I start with that, I've got a few overview slides to go through. Firstly, we completed a fundraise towards the end of last year, and this really left us in a great position. We have 11 million Australian on hand at the beginning of the year, and this was a perfect position to initiate a really aggressive exploration project strategy for 2023, and this has given us the firepower to execute that project. We're backed by a strong board, lots of experience in exploration, in mining, and in particular in copper. Before I dive into Botswana, I think it's also just important to notice the company has a number of assets. We still have projects in Western Australia, particularly our Perrinvale project, which is a BHMS project. This morning, we put out an announcement with a small JORC resource coming out of that project. So this is still active and running in the background. At the same time, we have an active investment into Armada and their nickel copper exploration projects in Gabon. They're sharing a booth with us here, so you're welcome to come through and we can give you more information on that project as well. The main focus of our exploration this year is in Botswana, and in particular, it's in the Kalahari Copper Belt. Just for some geological background, the Kalahari Copper Belt extends across Namibia through northwest Botswana and into southern Zambia. This has been a district that's been explored for almost 50 years now, but it's really been in the last 10 years that we're seeing this district turn into a producing copper district, and this has changed the whole theme for exploration here. We've focused our license holding in the Botswana portion of the copper belt, and we in proximity to two of those major new developments. Those are particularly Mateo production hub run by Sandfire Resources and Kumakawa Zone 5 development. I think one of the key take-homes from this area as well is there's sand cover over the bulk of the belt, and as a result, it's really with modern technology that we're starting to unlock the geological value in the area, and we can see this with the sort of review by the USGS regarding this as one of the most prospective, untapped said copper regions in the world. So it's fantastic to be placed in here. Where are our licenses? Well, I think the important thing is we're actually looking at 4 major projects in Botswana. We have the second largest license holding after Sandfire Resources. Our projects are strategically placed, and each project has its own sort of technical merits. The ones that are really going to focus on in this presentation are the 2 on the north. You can see the Kitliana West and Ngami copper projects. Now, in those areas, we're seeing it's almost a frontier environment. We're starting to open up district scale opportunities on the northern limb of the Kalahari Copper Belt. In addition to this, though, before we dive into that, into those two projects, we also have two projects, one located in the northeast of the Kalahari Copper Belt, and this really targets a long limb mineralization from Kumaka's development. And we also have our Kit East project right at the bottom, which literally borders onto Sandfire's mining license. So in that license, we'd be looking for analogs to Sandfire's T3 and A4 deposits. So a really encouraging story, huge land acreage to work through in a new producing copper district. The focus now is going to be looking at the two licenses on the northern Kalahari Copper Belt margin. We always liked this area. We picked it primarily because it was on the Copper Belt margin. It also has outcropping Quebi formation in the middle of the licenses. Now, this is almost a go-to strategy. If you look across the Kalahari Copper Belt, where you have Quebi and subcrop or outcrop, you tend to get clusters of your known deposits occurring. In this area, particularly in the Kit West block, you've got over 500 kilometers of prospective redox contact where you would expect to find mineralization. Because you're on the basin margin, you would expect to start seeing your carbonates and your correct brines forming and your perfect setting basically for said copper formation. And this is why we picked these areas in the first place. It was further substantiated when we did some airborne gravity test work, and we could notice we could start modeling some sub-basins in Kit West, which is really the perfect setting. Now, up until last year, this was really a geological concept. We had the benefit of starting our drill campaign on the Ngami copper project located immediately east in the middle of last year, and we had really stunning results from the first hole. We were drilling anomalous copper, and that's really been the theme up to today. We've finished 50 holes in that area now, consistently hitting anomalous copper. And what that tells you, if you look across the Botswana copper belt, you get regions that the whole contact is elevated in copper, but there are only specific areas where it's significantly anomalous. And when you have that, you tend to be in a region where you expect your deposits to actually occur. So we're really excited about that. That's put the missing ingredient into this area. We know we're in the right position in the basin, and now we also have the drill results to prove that we have copper in the system in this area. If we focus into our Ngami project and the results, now when you're looking in this district, what you typically find with each deposit is you have a sort of a halo of moderate grades in the order of say 0.5%, possibly up to 1% copper, and this can extend over several kilometers. To make it economic, you need to find the high grade zones in the middle. So it makes for a nice targeting tool. We've been targeting here particularly off soil sampling, but you zoom in, you find your sort of moderate grade halos, and then you zoom into the moderate grade halos and start looking for this high grade, often structurally controlled mineralization on the contact. When you find those, you start thinking of economics. So we've really had a few great results here. We've proven the region's anomalous. Then we found several of these sort of high moderate grade halos, and then we also have the benefit of having intersected a few high grade portions within in the middle of the moderate grade areas. I'll give you an example of that now. So this is the same area. You can see in the bottom image you have a 3D model of the figure I showed before. You can see the target superimposed on the top. And this has been the focus for this year's drilling program, which actually finished yesterday. So this year, our focus has been developing on this picture, drilling new targets, and then going into some of our more advanced targets and trying to look for more high-grade zones as well. Just to give you an idea of what a high-grade intersection would look like here, our best intersections through hole number 20A, and it includes over 9 meters at 3.5% copper and 30 grams of silver. For us, the important thing is the lower 2 meters of this hole are running at over 11%, or close to 11% copper as well. So what you can see here in the top image is almost a classic picture of what you would see if you're trying to develop any sort of new deposit in the Kalahari Copper Belt. Zones of high grade with a moderate grade around it. Now, what you need to do is infill drill there, look for more high grade zones, and then you start working on your economics. A reminder that while we're working on Ngami, we also have active programs now starting on the license to the west. This is the Kitliana license. I showed that image right in the beginning where you saw the soil samples, which has been really encouraging as well, suggesting that we're seeing the same sort of targets across this whole northern Kalahari copper belt margin. At the moment, we have a 9,000 soil sample program in progress. But importantly here, the cover is a little bit thinner. You're looking from outcrop all the way possibly to around 50 meters from our estimates. And this really makes it amenable for air core drilling. So we have an air core rig that's been sent in from Australia. That's in Botswana at the moment, and it's being mobilized out to site. And that will be used to try and fast track a number of the targets in this property as well. So we have a 10,000 meter air core program starting in the next couple of weeks. I think the other thing in this part of the license area, it's structurally complex. There's a lot of folding, lots of potential for different trap sites, which are perfect for looking at larger deposits hosted in fold hinges and closures, for example. The target to the left is a classic example. This is what we've called the Klo target, elephant and Swana. And there you see a beautifully sort of doubly plunging fold right next to Quebi formation with soil anomalies over the top of it. So these are the sort of targets we'll be advancing in the Kitliana West area over the next couple of months. I think the important thing, when you're dealing with such large areas, is you need a stage-gated exploration approach. And you need to work your way through a stage-gated exploration approach to make sure you can focus your exploration in the best possible areas. We do that firstly on a regional basis. Now, just to highlight on the way we would do that on a regional basis, an example of this, we're currently doing a group shoot airborne gravity gradient survey with Sandfire Resources. They covering our licenses and paying for half of that cost as well as part of the survey. And in that survey, you'd be looking for subbasins and margins of subbasins where you will get priority areas for, say, copper development. So that's how we will evaluate on a district scale. Then within the priority districts, we start generating targets, testing them for their copper potential. Once you have that, you start working to your higher grade zones, testing your higher grade zones, and then you start moving into resource definition. And you can really see that stage-gated approach highlighted in this slide over here. Finally, with so much going on, we've obviously got quite an active news flow for the year. We've just finished 5,000 meters of drilling at the beginning of the year. That finished yesterday, so we'll be expecting assay results in the next month or so coming out of that program. That was all over the Ngami project, and the focus there was new targets and trying to advance some of the more advanced targets like Comet by finding new high-grade zones within it. At the same time, we've got our soil sampling program happening in Kit West. We've got our air core programs kicking off. I believe the airborne gravity gradient, which was delayed a little bit, will now start in the next week. So we have a wealth of data coming in over the next months, and we'll use that to really vector in and generate targets for a diamond drilling program again at the end of the year. Final slide. We're backed by a really strong exploration team, a number of discoveries under the belt with quite a few of the members of the team, and also a really strong SEG copper focus to the team. Thank you.
Thank you very much, Adam. Next to the stage, can you please welcome the MD of Platina Resources, Mr. Corey Nolan. Corey Nolan was appointed Managing Director of Platina Resources in August 2018 to advance the company's early stage metal and minerals projects. He's an experienced public company director with more than 25 years experience focused on the acquisition, funding, exploration and development of resource projects in Australia and overseas. As the former CEO of Sayona Mining, he led the acquisition and development of the Auditorium lithium project in Canada, which in part has led to the company's market cap increasing from less than $500,000 to circa $2 billion. Please welcome Corey to tell you more about the Platina story.
Good afternoon, ladies and gentlemen, and welcome to the conference. Good to come and have the opportunity to talk about Platina. which has been going through a little bit of a restructure over the last few years. We've been divesting our platinum projects and focusing the company on becoming a West Australian focused gold explorer. We've got 7 projects in WA, 6 of those have granted. We're primarily going to be focusing on drilling 3 projects this year. And just recently, we joint ventured a 4th project out to Chalice Mining to take on that exploration program there. They're pretty much funding that exploration all the way through to completion of a pre-feasibility study. And we also own a world-class high-grade scanning deposit in New South Wales. It has the potential to also have nickel and cobalt credits. And we've been working on a plan to unlock the value of that project, which I'll go through a little bit later. I think I just wanted to talk a little bit about myself and my team, although I think I got a good introduction at the beginning of this presentation, so I won't spend any more time on that. But early last year, we hired Rohan Deshpan to come and be our exploration manager. Rohan's got more than 15 years experience, nearly all in Western Australia. And prior to joining Platina, he worked for 4 years at De Grey Mining and was part of the Hemi discovery, which is now about 8.5 million ounces. So we're obviously looking to bring his expertise and experience in finding projects in Western Australia and bringing that to Platina and complementing it with my ability to raise the funding for the company and deliver on our drilling programs. So our key value drivers are fairly straightforward. We're an exploration and drilling company focused on trying to find multi-million ounce deposits in Western Australia. We're working on a plan to unlock the value of the Scandium project that we have in New South Wales with a completed definitive feasibility study. And through the divestment of our platinum projects, we've been able to create some equity positions in some companies. And we've been slowly divesting those shares and using that to fund our exploration activities in WA, and that's enabled us to maintain a tight capital structure. It's good to be rolling into a year where we've got drilling programs going. We've got the momentum of the gold price behind us. The banking system issues that we're seeing at the moment have pushed the gold price up to $2,000, and let's hope that that keeps going through the rest of 2023. We rank all our projects in terms of prospectivity. As I mentioned earlier, we're going to focus on drilling 3 projects where we believe that we have the best potential for success this year. They're spread out through WA, 1 in the Ashburton Basin, and then we've got 1 near Kalgoorlie and 1 down near Norseman. Our priority project at the moment is our Brimstone project. We acquired this in late 2022. We like this project for a number of reasons. It's close to Kalgoorlie. It takes about 30 minutes to drive from Kalgoorlie into our project area. We've got quite a large tenement package, about 70 kilometres square here. And we're in fairly close proximity to some pretty significant gold deposits, including Kanowna Belle, but running along strike from some areas where there's been quite a lot of drilling on our tenements. We have the Penny's Fine Gold project. That was one of the key things that attracted us to this area was the high-grade nature of the mineralization they're finding in this area. There'd been some historical mining take place at Penny's Find at over 4 grams per tonne, and Horizon Mining are about to start mining here again, an ore body going over 5 grams. So we believe that the area has really good potential for identifying high-grade gold deposits. So there's been about $5 million worth of historical spending here. A lot of quite shallow drilling. In fact, about 93% of the drill holes are less than 100 meters depth. And there was a fairly large concentration of that drilling around a Garibaldi area. So that'll be one of our key focuses, is to come back in and do some deeper drilling and chasing the extensions of the Garibaldi deposit, where there's been some historical intercepts, 34 meters at 2.8 grams, 22 meters at 4.5, 55 meters at 2 grams. So we think this area also has the potential for delivering a lot of high-grade ounces here. And we've actually just commenced an air core program here. It started last week. We're doing 5,500 meters of air core drilling across all of our northern tenement package here. And in parallel with that, we're going through cultural heritage clearances, looking to get clearances done so that we can come through and do phase 2 air core drilling on our southern tenement package. So big program ahead here for us over the next 2 or 3 months, while we go through at least 2 phases and possibly 3 phases of drilling. Our second priority project is our Xanadu project, located in the Ashburton Basin. We've got a large tenement package here, about 560 square kilometres. We're about 30 kilometres to the south of Paraburdoo, so nice and simple from a logistics point of view and an access point of view. We're sort of centred, our tenement package is centred on the about halfway along the Nargilgadi fault zone, and you've got a number of historical operations here, including Paulson's, which ran at over 7 grams, and the Karla Winder project. It recently kicked off production as well. But we do rate this area as being, relatively underexplored. The tenement package that we have is quite large. The western, what we call Xanadu West, is a series of prospecting licenses there highlighted in blue. There's been quite a lot of historical drilling here. Most of that focus was around doing shallow drilling, building up oxide resources for a small mining operation and heap leach project there that you can see in the photos. Unfortunately for those operators, that project didn't work out particularly well. They were able to mine quite attractive grades of gold, but the highly altered rocks here wouldn't percolate the cyanide, so they were actually never able to recover any of the gold. But our project is in it's in a really interesting location. We've got several fault structures running through here. We've got the one that I've just been talking about on our prospecting licenses, and then we've also got one that's the host to the Mount Olympus deposit, which is about 1.44 million ounces in resources, and they've actually historically mined about 350,000 ounces. And we just recently announced, for the first time, we sort of did some regional exploration across our package, and we've come up with a new prospect called Hermes, which we think is really looks very interesting. This is some of the drilling on the prospecting licenses. So this is about 10 kilometres of strike, and it's a very intensely altered suite of rocks, a large low-grade envelope with a number of structures controlling much higher grades, like 8 meters at over 5 grams. And we did quite a large IP geophysics program here last year, followed by a short drilling program. Unfortunately, we were unable to drill some of the deeper IP targets because of the quality of the rocks. We just couldn't get the rig to drill deep enough. So we need to come back here with a diamond rig and do some much deeper drilling, looking for the source of what we're trying to do is find the source of this mineralization at depth. So we'll be back here hopefully later in the year with a diamond rig to follow up that program. And our Hermes target, it's about 8.5 kilometres along strike from the Mount Olympus deposit. we'll be working on trying to get our access done and our cultural heritage clearances done so that we can also drill that prospect later in the year. We've had rock chips up to nearly 2 grams per tonne on our Hermes prospect. Our third project that we'll be looking to drill this year is our Beatty project. It's located just to the south of the Norseman gold belt. There's about nearly 5 million ounces of gold defined at the Norseman gold project. About 1 million ounces of that is located within the Scotia Mining Centre, which is 10 kilometres away from our tenement. The structures pretty much run north-south through here. Aruma Resources have been drilling their Salmon Gums project to the south of us and intersecting quite narrow but very high grade intersections of gold there. So we think this is a really interesting target for both gold, nickel and lithium. And we've just completed a major soil sampling program throughout this whole tenement. And we'll be updating the market as soon as we get those assays back in shortly. But we'll have to complete an environmental survey and some cultural heritage surveys, but hopefully with a view to being able to drill maybe in 3rd or 4th quarter this year, depending on how long it takes to get those permits in place. And we've just done a joint venture with Chalice Mining on our Mount Narrow project. It sits in the very western Yilgarn Craton. We believe that we have the right combination of structure and rocks here to host a dual mass style deposit. And we believed in terms of optimizing our portfolio, in terms of resources for drilling and people, that it was better to partner this project out to a company that had the expertise in this area. So we're obviously looking forward to them getting on the ground and starting that work. In 2018, we completed a definitive feasibility study on our Scandium project in New South Wales. It had very good economic outcomes. The challenge that we faced was the small size of the scandium market and the ability to be able to monetize the scandium oxide product that the DFS was designed around. So we've been doing a lot of work in terms of how we convert that scandium oxide into a more user-friendly master alloy product at Swinburne University, and we've had some great success doing that. And it sort of comes at a really interesting time for the scandium market. There's been a number of aluminium producers, global aluminium producers, moving into the scandium market and developing operations, and we really see that as a game changer for this industry. So keep an eye on this one. We expect to be able to unlock that value. The important thing is we've got a number of active drill programs planned for this year. We've got, at the end of December quarter, we had $1.5 million in cash. And what we've been doing is selling down some of the investments that we have in our portfolio to help fund those operations and keep our share capital as tight as we possibly can. And we'll continue to do that through this next quarter as well. So summing up, our key share price catalysts for this year are going to be the outcome of the results from our soil sampling programs, our 2 drilling programs that we've got planned, unlocking the value of our scandium project, and realizing value from our investments. Thank you very much.
Thank you very much, Corey. And you can find Corey and Platina Resources at booth 63. Next to the stage, can we please welcome the president of Lift Power Limited, Alex Langer. Lift Power is focused on exploration and development of hard rock lithium deposits in Canada. The company is one of the most exciting exploration portfolios of hard rock lithium projects globally. Mr. Alex Langer, president of Lift, is here to present the Lift story.
Great, thank you very much. Can you all hear me? Awesome, all right. Lift Power is a Canadian listed exploration and development company focused on district scale hard rock lithium assets in Canada. There we go. Forward-looking statements. I will be making many forward-looking statements. So please review this. It's also on our website. The legal makes me say that. There'll be a lot though. All right, and so far in our portfolio, we have 3 really exciting projects. I will be focusing on our flagship, the Yellowknife Pegmatite project for this presentation because of the essence of time, but there's other 2 projects I will touch on. The first project is the Yellowknife lithium project, as I mentioned. It's 13 significant spodumene pegmatites with average grades of 1.07% lithium up to 2.2% lithium. The pegmatites, which is really amazing, have nearly 100% exposure at surface. So it's easily to see the size and scale that we have right at surface, which is quite interesting. Excellent transportation and infrastructure. We're close proximity to rail, to barge, and to roads. And we have a massive drilling campaign planned starting this quarter, and that'll be 50 to 70,000 meters of diamond drilling across the 13 different spodumene outcrops. Our other 2 projects, one is located in Quebec. We are one of the largest landowners in the James Bay region. We have over 2,300 square kilometers there. Over the last couple of years, we've done systematic geochemistry sampling. We're looking for pegmatites. The theory is buried beneath former glacial sediments. We're currently drilling there now. We announced that a week ago. We have a $7 million budget for that program. We have 2 really encouraging targets that we're drilling, and another 7 that will follow up next year. Finally, our Cali project is also located in the Northwest Territories, really close to the Yukon border. That one there is very interesting as well. It's about a 1,200 meter by 60 meter wide spodumene pegmatite. We've done a bit of channel sampling, 1.14% over 12 meters. Once the snow thaws, we are pretty far north. We'll be sending a crew up there to do final target definition for hopefully drilling by the end of the year. So we could be drilling 3 projects during this calendar year. People really heavily focused on the technical side of things. It's led by our CEO, Francis McDonald. Francis is an exploration geologist. He started at Newmont. Most recently, he founded a company called Kenorland, which is one of the most successful project generator companies in the world. I think last year they had an exploration budget of over $35 million US, including a really significant discovery in Quebec. I myself, capital markets, I left Canaccord in 2008. From there, I've worked the capital market side of things, putting companies together, finding projects, management teams, raising capital. I was with Millennial Lithium as vice president there for 5 years. We sold that project as a lithium brine project in Argentina to Lithium Americas for just under $500 million just over a year ago. So pretty comfortable with lithium. Some other people, again, I'm just going to touch on them, but please go to the website or come visit me. I'd love to explain them a bit more. One person is Dave Smithson. He's our senior vice president geology. He was at Newmont for the majority of his career. Carl Burley, Carl's our VPX. He was part of the discoveries of the diamond mines in the Northwest Territories, so he knows it quite well. He was also part of Bacanora Lithium as well in Mexico. Martin Scheinbild, he's actually up in Northwest Territories right now. He's a chemical processing engineer. Spent the majority of his career at Albemarle. And then Don Haynes. Don is an amazing lithium expert. When you write, the majority of the portion for the lithium section of the 43101 guidelines, you kind of know your stuff. So we're quite fortunate to have a really strong team. Quickly, 2 more people I'll touch on. One is Ian Scarr. Ian was our chief operating officer at Millennial Lithium. Previously, he spent 30 plus years at Rio Tinto, mainly working on the Jajar project. Subsequently, he was a part of 3 different feasibility studies in Salta in Argentina. All those 3 projects, including Millennial Lithium, were eventually sold. And then finally, Wanda Cutler is one of our directors, and she was with Nemaska Lithium. Share structure, our share structure is fantastic. We have 39 million shares outstanding, 0 options, 0 warrants, so that's fully diluted. We have $50 million in the bank. We just completed a $35 million financing. It was led by Canaccord. BMO was there as well as National Bank, so some good names. Hopefully we'll get some coverage kind of moving forward. We do have a high share price this year of $16. That was after the announcement of the acquisition of the Yellowknife Pegmatite province. Canada is one of the top jurisdictions for lithium pegmatites in the world. The way I like to, I guess, kind of portray it as it's kind of like Australia was during the first cycle. A lot of really smart money, a lot of really good miners went to Australia during the first boom, and now they've built these incredible companies, really strong returns for shareholders. The second cycle came through and some more projects came online, and Canada just started to scratch the surface. Now that we're kind of in that third most recent cycle, we're really seeing some amazing stuff coming out of Quebec and Ontario. Market caps are growing there substantially. They're coming out with some amazing results. We truly feel that Northwest Territories will also be part of that. The geology is very, very similar to Quebec and Ontario, which is very, very similar to Australia. What's also quite interesting is the Yellowknife pegmatite project was actually discovered in the 1940s. So it's not a new project, it's just kind of been under the radar for a little while. Yellowknife infrastructure. I'll go a little bit quicker here now, sorry. You'll see in that oval shape, all our pegmatites are located within that area. Great road accessibility. There's infrastructure in place. There's a railhead at Hay River. So if we want to transport concentrate to anywhere in North America, railway is not far away. There's paved roads. You can see the Ingram Trail. That goes up to Acadie and Diavik, the diamines that are shutting down in the next few years. Excellent workforce that will be coming available. So in terms of infrastructure, this is exactly what you want for a large-scale world-class project. We have two groups of pegmatites. We've broken them up. One we call the road access because they're road accessible, and the other one is the further afield group, but it's only 120 kilometers away. The road access group is all within 10 kilometers via road, and a lot of them you can drive to. The further afield group, the one project in particular is called Thor, is very, very attractive. It's about 20 kilometers from Great Slave Lake. And then Nechalacho rare earth deposit is actually in production right now. And what they do is they produce, they mine, and then they send their concentrate across Great Slave Lake, which is the 6th largest lake in Canada. We have some big lakes there, all the way to Hay River, and then it gets processed off railway, which is much cheaper than transporting by road. Zooming in a little bit more. So, these are examples of the pegmatite. They're visible from space. The new Artemis II, the Canadian guy, if he wants to look down, he'll be able to see kind of the full pegmatite field. That Phi deposit there, that's 1,800 meters in length by about 15 meters in width. Those yellow dots are trees. Those are Canadian trees. They're good size. Now you're starting to get an idea of the size and scale of what we have here. Zooming in a little bit more, this is all our projects in the outcropping at surface. I'm going to go through some of the numbers for you just to give you an idea of the scale and the size of the opportunity. That Phi main one I mentioned earlier, 1,800 meters long, 50 meters wide, 1.05% lithium. Just to the south of that, the Phi Southwest, 900 meters long, 20 meters wide, 1.49% lithium. The Kaidi, 1,500 meters long, 12 meters wide, 1.4% lithium. Big North, 500 meters long, 30 meters wide, 1.27%. Big West, 1,000 meters long, 20 meters wide, 1.53%. Big East, 900 meters long, 20 meters wide, 1.45%. If you look at some other companies, one of these would be a company maker. We have 13. Thor is another example, 700 meters wide, 300 meters in length, and an average grade of 1.59% lithium. And that's a dike swarm, so it's quite interesting. Overall, we have over 10 kilometers of strike length at surface. There has been some drilling done at project that was done by Canadian Superior in the 1970s. They drilled just under 3,500 meters, a total of 23 drill holes. Drilling showed that the pegmatites are similar widths and grades at depth, and we'll prove that out with our large drilling campaign. A bit of timeline of the project, how is something, so significant being, relatively under the radar for the last while. I'll kind of walk you through it. So again, discovered in the 1940s. In the 1950s, the US government was up there, did drilling, sampling, mapping. They were looking for lithium for nuclear bomb procurement. That obviously kind of shut down. In the 1970s, a gentleman, his brother was one of the top nuclear fission researchers in the world, said, listen, lithium is a big part of nuclear fission moving forward. Go take a look at what's available. So this gentleman scoured the whole world. He went to Australia, he went through the US, the Carolinas, lithium, he went to Brazil, Argentina, Bolivia, Chile, everywhere looking for lithium deposits. And he decided on this one. This had the largest opportunity that he felt for a world-class deposit moving forward. So he picked up the projects in the 1970s. From there, he did a deal with Canadian Superior, who did the majority of the work. They did drilling, mapping, sampling. They trenched every single one of these pegmatites over very tight spaces all the way through. So we're very comfortable with the grades that we have at surface. In 1980, Canadian Superior Oil decided to exit the mineral business. Good idea. In 1983, they sold ExxonMobil, obviously. In 1985, Ross Beatty and Equinox did a joint venture with this gentleman. So all those tenements came back to the one gentleman. They did a bunch of metallurgical work in 1987, really, really positive bulk samples. And then in 1994, Equinox was acquired by Hecla, and these deposits returned back to the single individual. And they've really been dormant since 1994 until we acquired them late last year. Canadian Superior, they did a resource report. This is historic in nature, but it came up at 49 million tons, graded 1.4%. What's interesting there is it's only down to 150 meters. Our theory is that with a bit more drilling, a little deeper drilling, we should be able to find mineralization down to about 300 meters, if not further. But a lot of the feasibility studies that are out there right now are doing pit designs of 250 to 300 meters. So we're quite comfortable with that number. So our goal, obviously, after this drill program is to come up with a very significant number, hopefully doubling the size of what Canadian Superior had. Metallurgical studies, this was done by Ross Beatty. You can see the consultant there. What this showed is that we're able to produce a spodumene concentrate between 5 and 6% with an overall recovery of 80%. That was only using gravity, tabling, and flotation. No DMS studies really weren't available at the time. Low iron content, but the end result, a lithium carbonate was produced with a standard Rose and acid leach process. So this year we'll do a bunch of bulk samples and a bunch more met work as well. This is some of the crystal sizes. People like to see them, 50 to 80 centimeters long at Thor, the Big East, the spodumene crystals there. And then at Bet, that pencil, you can see there for scale, that crystal is over 2 meters wide. Pretty neat. So in terms of our methodology and what we feel we have a size, kind of 3 different ways we are looking at it. Number one is using that Canadian Superior exploration resource and just going deeper, going from 150 meters to 300. You double the tonnage, you're at 98 million tons at 1.4%. If you want to do a surface method to project down, we can use a 2.7% SG. That's going to give you 125 million tons at 1.33%. And then finally, a 3D model based on the dike information we have at surface gives you about 95 million tons at 1.33%. So any one of these is giving us kind of that 100 million ton number. Put that into context of the rest of the world. If we get even the base case there of just under 95 million tons, would be a top 10 largest lithium hard rock deposit in the world and one of the largest in North America. I'll be quick here. Quickly comparing this to Sigma. Sigma also has outcropping all at surface. Sigma's in the blue. We're in the yellow. As you see, Sigma has a surface area of 85 square meters. Ours is 158 square meters. Their projected tonnage at surface was 69 million tons. Our projected tonnage is 128 million tons. They actually came out much higher at 85 million tons. Again, we don't know what we have yet, but this gives you kind of a good comparison of what's at surface and what could be there totally. Quickly, Quebec, as I mentioned, we're drilling there. 2 drill rigs are turning now, quite exciting at Rupert. We will be building up about another 7 drill targets that we'll be drilling in 2024. The Cali project, this one is very close to the Yukon border. As soon as the snow melts, we'll be up there trying to finalize drill targets. The one sample or trenching sample that's quite interesting was 12 meters by 1.14% lithium. It's actually over a 300-meter vertical face, so we can start to see scale as well. So this has potential to be, again, another really prolific district-size project. So finally, we will be coming out with an NI 43-101 within the year at our Yellowknife lithium project. We have world-class hard rock potential at all 3 projects. We are well financed with $50 million. We have a tight share structure, and if all goes well, we'll be drilling at 3 projects this year. Again, I'm just over the wall, booth number 96. So come say hi anytime. I'd love to chat. If not, please check out our website. And thank you very much for your time.
That's good, yeah. Thank you very much, Alex. Appreciate that. Next to the stage, can we please welcome the CEO and Director of ION Energy, Ali Haji. Ali has over 15 years of international experience, including asset management, risk analysis, and program governance. Ali serves as Director of Antler Hill Mining Limited and as an advisor to Atma Capital Markets. He also jointly serves as CEO and Director of Auditorium Resources, an emerging copper explorer in Mongolia, and is proudly a member of the family of companies that include Step Gold, Mongolia's premier gold producer. Please welcome Ali.
Thank you. And thank you, everybody, for joining us. I know it's probably a bit exhausting after a long day at the conference, so thank you for your time. Forward-looking statements, fairly typical, as you would have seen from the other presenters here today. A bit about the team. I think people, of course, build a company, and you've had my intro, so I won't dwell on that. But my chairman, Matthew Wood, is a serial mining entrepreneur with various successes around the world. More recently, the sale of Avanco Minerals in Brazil to Oz Minerals for about $440 million. And an individual that's been granted the Order of the Polar Star, which is the highest honor an individual can receive from the Mongolian government. Wendy Lee is our director in Asia. She represents the various strategics in that region. Given we are in Mongolia, it's important that we have presence there. Bata Tumarochir is the chief executive of Step Gold and one of our 2 Mongolian board of directors. Anil Varach, an ex-investment banker at Dundee Goodman, and then Engtushin Kishisuren, who runs our exploration programs in country. So you must be asking yourself, where's the lithium experience? And I'm going to leverage what Lift said prior to my presentation here, but we have a pretty sound team. Our advisors consist of Paul Fornazzari, the original chairman of Lithium Americas, a founding director of Neolithium, a senior partner at Fasken, and the lawyer on file that sold Neolithium to Zijin for about $1 billion 14 months ago. Don Haynes, the very same advisor that's on the team at Lift, is part of our team, so we're very happy to have him. He currently designs our exploration programs, reviews the work being done in Mongolia, and has been out to site 3 times and is probably expected to return in the coming weeks. Dr. Hashbat Dashtatsaren is our in-country scientist, so he ensures that Don's instructions are carried out. Dr. Mark King is a qualified person, a geologist by trade, a hydrogeologist that has a master's degree and a PhD, of course. But importantly, the qualified person on file at Neolithium when it's sold to Zijin. He's worked for the likes of Albemarle, Lithium Americas, and various other majors. And then Dr. David Deek is more on the supply chain side, but he joined us as an advisor about 2 years ago, prior to what he does today as a consultant. He was at Tesla, where he helped build Gigafactory 1 supply chain. And prior to that, he was at Lithium Americas running their technology office. So in 2017, we started ION with the vision of looking for lithium in Mongolia. You know, most, I think, have never even thought of that prospect. But sure enough, in 2017, we looked for lithium in Mongolia at the end of the last cycle. We recognized that there would be a bit of a re-rate or a cyclical nature of the element, and sure enough, it has returned. Mongolia today, for those of you that are not familiar, it's about 1.5 million square kilometers, 3.5 million people. It is a democracy. It's an ex-Soviet satellite. It's been around since 1991 as an independent sovereign nation. Mining contributes a fair bit to its GDP. In fact, 80% of its exports are in the mining space. And so it's a very well respected and encouraged industry and country. We've seen a lot of investment come in from the likes of Rio Tinto. They've recently put in about $5 billion in the Turquoise Hill acquisition. So it's about an $8 billion endorsement for the country. Zijin very recently invested in Xanadu Mining, which is a copper explorer in Mongolia. And then last but not least, Sinomine, which is a Chinese major, has recently invested in a private lithium play in Mongolia as well. So we've been in Mongolia as a group for about 13 years, but 14 now, I suppose. My chairman, Matthew Wood, ventured there in 2009, 2010, looking for gold, ended up being there during the last coal boom, acquired a number of coal-bearing assets, found an inferred resource, and ultimately exited to Banpu of Thailand for about $500 million in cash in 18 months. So that set the foundation for our success in country. We went back in 2016 to look at an asset owned by Centerra Gold by the name of Altan Saganovo. We acquired that from them, and ultimately that was an IPO in 2018 that produced gold in 2020. So we have the capacity and the ability to build mines. Step Gold currently puts out about 50,000 ounces and is Mongolia's premier gold producer. And then last but not least, ION was the venture for lithium. And we've done so with an IPO in August 2020. And beyond that, we now have 2 licenses, so 2 assets spanning 110,000 hectares in total. Our asset that we went public on is Bavayul. It's 81,000 hectares, 23 kilometers from the Chinese border. And for a sense of scale, that's about 60 kilometers wide by about 20 kilometers tall. Historical drilling on the asset showed us an average grade of about 426 ppm. Having gone public in the pandemic and not having lithium exploration skill set in country, we were a bit delayed and we weren't able to really advance this asset. But we did do a number of auger holes. We found grades of up to 1,502 ppm. And we also found a very exciting copper nickel outcrop, a gabbro-style outcrop that, of course, given the scale of the license, we're grateful that we found something in addition to what we were seeking. In 21, we acquired Urgak Naran. Urgak Naran is 29,000 hectares in Dorngovi province, situated in one of the most infrastructure-rich provinces of Mongolia. It is a fault-bound basin, a closed basin environment, so very similar to what you would expect to see in Centenario in Argentina. The salt lakes on surface, when we were there in April last year, we had the results assayed, sort of the old school, take a Coke bottle to it and see what you find method. And we got a grade of about 918 milligrams per liter. So that was encouraging and exciting enough for us to say we'd like to do more work on this asset. We do recognize, of course, that 918 is likely concentrated as a result of being on surface and in a natural evaporation pond. That's our team on site back in April last year. So Don, Mark, myself, and Enki, and that was our exploration camp in country. And you can see some parallels being drawn by Mark, where he compares the geology and some of the early results with what has been seen in Nevada as well as in South America. Following that brine assay result, we opted to do a TEM geophysics survey across the entire basin. We found low resistivity zones that were encouraging, starting at about the 0.2 ohm mark. And for majority of the juniors out there, about 7 ohm is where you get excited, or that's your cutoff. So 0.2 was exciting enough for us to say we should do an additional line across the entire basin. That 16-kilometer trend, or 16-kilometer line that we then completed thereafter, showed us a volume at 6.5 ohm cutoff of about 22.7 billion cubic meters. At half an ohm cutoff, that number is 9.9 billion cubic meters. So it's a rather significant low resistivity zone beneath surface. We then opted to commence drilling. So we did 3 lithological holes sort of spread out across the basin. The one that you see there, I'm not sure if there's a laser pointer, but the one that you see labeled in pink is very close to those salt lakes. But the 3 lithological holes in total, about 950 meters, drilled to between 300 and 350 meters each, gave us a sense of what the host rock was and what that looked like. And some of the equipment that we had on site, so the water well and the diamond. And in December last year, we put out results from our lithological holes, where we had, on average, about 100-meter intercept with an average grade of 320 ppm lithium. Why that number is important is if you were to look at Albemarle Silver Peak Mine in Nevada, when they performed very similar lithological drilling on that site, their average grade was 121. We're showing about 320. Albemarle Silver Peak today is the only operating brine asset with evaporation ponds in North America. So it draws great comparisons, and it also kept us excited enough to complete our water wells. We've now completed our water wells as of last week. The team is currently deploying pumps, balers, and various other equipment for us to complete our airlift testing and our pump testing. And we will collect brine samples next week for assay results before the end of April. And then, of course, given the volume on the TEM geophysics, we will start to infer a resource that we expect to put out well before June. That's the equipment being wrapped up there on site. We talked about copper nickel, and I'll touch on this very quickly, but we did have the anomalies that prompted us to build a joint venture or a reciprocal mining rights agreement with the Copper Explorer in Mongolia. So essentially, ION gets to monetize any copper nickel found on our assets as a result of this. From a cap table perspective, about 60 million shares outstanding today, so relatively tight for a junior. 25% in the hands of management and insiders. We've never sold a share, and we continue to buy on market. The Mongolian investors that you see there are with respect to individuals, private individuals that have invested in the organization. A number of family offices and perhaps some funds that you would be familiar with also hold a significant chunk of the company today. We're trading at about 30 cents with a market cap of 17.9 Canadian. So we've been rather aggressive despite not having access to country. Going public in 2020, we acquired our second asset in 21. We completed a bought deal with PI Financial and Stifel GMP that paid for all the exploration and the work that we continue to do. We continue to speak with various strategics in order to validate the work that we're doing. Given we are first movers, we don't have the proximity advantage where you can point at your neighbor and say, this should be my valuation. We've got to prove it out. And one of the ways we do that is through a strategic investment to a hold in our organization. So we continue to push that path forward. As discussed, inferred resource will be announced before the end of Q2, and then we start working towards measured and indicated, as well as scoping towards the end of the year. For comparison purposes, from a market cap perspective, we talked about Albemarle Silver Peak, but the proximity play that I touched on there a tad is illustrated in sort of the image that shows the two maps to the right. When you're in a location that has a neighbor that's either producing or has a defined resource, you ultimately tend to re-rate whether or not you've drilled a hole or not. Some of the coverage that we have there is listed. In fact, Couloir just put out an update yesterday for $1.45 per share. We are currently speaking with PI Financial, Stifel GMP, Cormark, 8 Capital, and Red Cloud Securities for the potential for them to initiate institutional coverage once we have our inferred resource. So currently, we sit at the bottom of most comp tables, and we have an exciting year ahead with respect to the inferred resource announcement. Hopefully you recognize, and I think Joe Lowry made a great point of it this morning, showing the significance of China and its consumption. So our location is rather strategic. Hopefully we've proven that the team is experienced. We know there's a rise in demand. Based on the work that we've done in Mongolia to date, we can say quite surely that the margins will be competitive, and we believe we're well positioned to provide shareholder value. So we're over at booth 41. Should you have any questions or would like to follow up with me in person, please feel free to pop by, and otherwise I'll direct you to our website. So thank you very much for your time, and thank you for joining us.
Thank you very much, Ali. Next to the stage, can I please welcome the Managing Director of Black Cat Syndicate, Gareth Solly. Having listed on the ASX in 2018, Black Cat Syndicate has quickly grown and now has 3 advanced assets in Western Australia with a combined mineral resource of more than 2.3 million ounces of gold. Within its assets, the company has a range of critical metal opportunities, including Australia's largest undeveloped antimony deposit and copper, rare earths, PGE, and nickel exploration targets. Black Cat's experienced board and management is targeting a final investment decision at its high-grade Paulsens gold operation in mid-2023, which will be the first step in its journey to build a new multi-operation mining business. Here to tell you more is Managing Director Gareth Solly.
Thanks, Matt. And good afternoon. Final one for the day, everyone. So bear with me. I'll get through this. It's something a little bit different, gold, and a little bit of antimony in the mix as well. And gold, probably given the current financial situation in the world, is critical to everyone's portfolio. So maybe you should look at that as well. Summary of Black Cat. So we are a gold-focused company, gold business first, 2.3 million ounces, all located within Western Australia. So tier 1 jurisdiction, 3 individual projects, Paulsens, Coyote, and Cal East. Paulsens and Coyote are 2 of the highest grade underground gold deposits in Australia, and they have installed infrastructure. So for us, that means they can be turned on relatively quickly and for low capital. We do also have some antimony kicking around in the Paulsens district, and I'll talk a little bit through that in this slide. It is a critical mineral. A little bit on the corporate structure. 267 million shares on market. We have been around for 5 years now. Market cap is currently around 120 million. Plenty of cash in the bank. Obviously, that's about a quarter old, but there's still plenty of cash in the bank. Top 20 shareholders have about 45%. We've got some good names on the register: Franklin Templeton, US Global, Earth Resources, and the directors hold about 10% of the company, having invested 8 million of their own cash. Those directors include Paul Chapman, who's here in the audience, and with me in the booth if you want to come past and have a chat. But Paul and Les, they founded Silver Lake Resources and took that company from a concept to a profitable business. Tony Polglaze has built mills all around the world, and like one of the previous directors in the previous company, he was with Avanco and took that from exploration all the way through to successful M&A. We've got Philip Crutchfield, a King's Counsel on the east coast of Victoria, and also an investor and a director of other small companies. And myself, I'm a mining geologist, so I'm looking forward to taking this company into production. A little bit about what we do. Being around 5 years, having to raise money from investors, we put that money back into the ground. So that we've always been very active. We started with no resource and we've built 2.3 million ounces over a 5-year period. Lots of heartache, lots of being tight with the money and making sure it goes back into building resources. Right now, because we have 2 of the highest grade deposits in Australia, we can focus on our margins. We're looking forward to moving into production. We'll be generating cash from high grade resources and we'll be reinvesting that in the business. So our staff are aligned with the corporate values and they will be rewarded once we get each of our projects up and running. And you can see the sort of run rates that we expect on the screen. Those projects are Paulsens, Coyote and Cal East, as I've already said, and I'll talk to each of those in turn. Paulsens first, and that's where we're most active. We've currently got 2 rigs in the underground building on the resource, which we'll be reporting again in May. And we want to be in a decision point on restarting that particular asset in the middle of this year. Coyote, we upgraded the resource in January based on the 5 months of drilling we completed last year. That's 356,000 ounces at 14.6 grams per tonne in the underground. So very, very high grade. There's 650,000 ounces in that project portfolio up in the Tanami. So we'll keep doing work on that, and that makes a fantastic second or third project for us. And Cal East, we've got 1.3 million ounces. We released a PFS last year. That shows that we can generate lots of cash flow based on building an 800,000 tonne per annum mill, which is permitted and ready to go when the environment's right to get that underway. So Paulsens first. Now this is the asset that kicked Northern Star from an exploration play to a producer and gave them cash flow, allowed them to leapfrog and buy other assets. For us, Paulsens is a 1,000 square kilometre land package and it's got fantastic prospectivity. Not only gold, it's got base metal potential. We've got antimony there. We have a 450,000 tonne per annum gold plant that's on care and maintenance. It's in good condition. We've got a dewatered, ventilated underground. We've got 2 rigs in there, able to rapidly build resources in and around that underground. We've even got a coal resource. Talking about the underground now, we increased this in February. So when we picked this up last year, we could see some easy wins. We've gone and targeted those with a couple of months drilling last year, and then we're still been progressing that this year. But with just what we did last year, we're able to increase this resource by 70%, 258,000 ounces here at 10.8, so high grade, just off our development, ready to be turned back on really. 56% of that is measured and indicated. We're doing work at the moment to increase that percentage of indicated, and it all remains open. So there's lots of upside here. Now, importantly, you know, the resource that we have published now and estimated is about the average that this mine has had throughout its life. So it operated for 13 years. It never had a big resource. It never had a long mine life. It's very typical of lots of small Australian gold mines in that it ran with only a couple of years in front of it. And we're back at that point already. So we're planning to release a new resource here in May. That'll see an increase to this one. And on the back of that, we'll make a decision on restarting this project. So a little bit about antimony. It's a strange mineral and not many people know a lot about it. It is a critical mineral though. So it's classified that way in almost every jurisdiction. Lots of uses in everyday life, used in plastics, used as a fire retardant, used in nuclear is very important. In times of war, consumption goes through the roof because it's used. Great uses in military applications and munitions. So heaps of current uses and a lot of future uses. Obviously, green technology and new anodes, batteries, grid scale storage, all of this is coming, and that will see increases in our requirements of this mineral going forward. And mine production is actually on the decline. So it's been declining for the last decade as requirements go up for this particular metal. China, of course, dominates the supply, Russia to a lesser extent, and output from China has been decreasing. Annual growth rate is forecast to increase, as I've already outlined, So that you can see there's a problem coming. There's not enough antimony in the world, particularly with the potential for the decarbonisation that we're here talking about at this conference. We do have a fairly large deposit compared to Australian standards, at least. We've got the third largest deposit in Australia, and it's the only undeveloped deposit of antimony in Australia. So this sticks out of the ground. We've got lead, antimony, and silver veins that are sticking out of the ground, and you can go and rock chip that at surface. So the current resource is about 14,000 tonnes of antimony, about 19,000 tonnes of lead, a fair bit of silver kicking around, and a bit of gold in the system. It's certainly open. So there's a lead and silver antimony-rich eastern zone here, and there's multiple lenses here. There's only resource on one of the 4 identified antimony lenses. And then you've got the western zone, which is a copper-rich and gold-rich system. And again, that is open along strike. We've got some fantastic grades, up to 50 grams per tonne gold, 6 and 7% copper, 7% antimony, and 2,000 grams per tonne silver. So this is a fantastic system, and we're very excited to be going and drilling this and growing this particular resource. And it's only 30 kilometres from our current mill and our well-established site. So to float a con on the back of this, there doesn't need to be a lot of work done to our existing facility to be able to generate a con, and then you could export that out. Regionally, there's a lot of other base metal mineralisation in the area. Lots of gold mineralisation, obviously, that's what Paulsens is known for, but there's a lot of copper results throughout the tenement package. It's all very early stage, so there's rock chips, there's soils, fantastic grades. There's old adits and historic workings here that the old timers clearly went after the copper as well. But for us, the drilling hasn't been done, so it's an opportunity. We'll be at Belvedere later this year drilling. There's a 30,000 ounce gold resource there, but there's also a lot of copper potential. So the future for Paulsens and that project is not just gold. It can be the antimony, it can be the base metals. All that work needs to be done. Coyote, briefly, so again, we saw those high grades, 14.6 grams in the underground, an established plant here. And we have the only facility in the WA side of the Tanami belt. So we've got a dominant land holding here, dominant position in terms of the infrastructure in the area, 885 square kilometres of very prospective ground. The 300,000 tonne per annum plant's on care and maintenance. Obviously, we'll be doing work to refurbish that in time. And this is a great second project for our team. So our first project is Paulsens, re-establish that, and then this can be number 2 or number 3, as it may be. A little bit about the underground here. So the current resource after depletion from historic mining is still over 1,000 ounces per vertical metre. It's still growing. So we put 5 months into this. What we've done is come back and look at this with a slightly different view from what the historic miners were looking at. They were following the south limb of a folded of an anticline here. We've looked further down the belt. We know that most of the gold is in the hinge zone of the anticlines. So that's where we've targeted. And that has generated substantial resource growth for us. Obviously, this is high grade, and we've got mine plans that we're working on to look at extracting this at some point in the future. But more work needs to be done, and that's what we'll do over the coming year or two. In the area, again, lots of potential for other things apart from just gold, but there are big arsenic anomalies that could be, there's kilometre scale arsenic anomalies here, and that's what you need to go look for if you're going to go start looking for early stage discoveries. The other thing we've got here in this belt, nickel, cobalt, platinum group intrusives that have had hardly any work done on them. There's heavy rare earths, obviously, up in Browns Range to the north of us, and we've got unconformities on our ground and lots of potential. So lots to go on with after we get the gold business established and cash flow coming in. Lastly, onto Cal East. This is where we floated 5 years ago. This project was 80 square kilometres and no resource at all. And that's how the company started with, just 5 million in the bank. We've now got 800 square kilometres here and 1.3 million ounces in resource. And we've got reserves here. We published a PFS last year, mid last year. And that showed that we could go and build an 800,000 tonne per annum facility, 50 kilometres out of town, and generate cash flow. And that's just the initial base case, looking at only a small portion of our existing resource base. So there's a lot of value here in Cal East, and it's a brilliant project that we'll be able to build out of cash flow likely coming from Paulsens. News flow. Again, as I said earlier, we've always been a very, very active company, and that's no different right now. We've got 2 rigs in the underground at Paulsens, and that everything that they do, we release, and there's lots of numbers coming out of that, very high grades. That'll be going into a resource update in May. On the back of that resource update, we'll make a decision on whether we're going to go mining. If that is a positive decision, then we're talking about only a 6-month time frame to get the mill refurbished and commence mining to be able to put gold bars out the back in early 2024. There's a lot of regional exploration going on both at Paulsens, Coyote and Cal East. So there'll be more news coming out of those projects, and hopefully some antimony results coming out in the middle of the year from our drilling at Mount Clement. So to wrap it up, big gold resource. It's very fast growing because there's a lot of activity coming from Black Cat. There are other elements, and there's critical minerals in our portfolio, and should the price of antimony ramp up, we've got an easy project to get on with there. Lots of news flow coming from the business, very established infrastructure. That means that we can rapidly get back into production, and we will be back in production over the next year or so. So we're well positioned for the current environment of strong gold price and increasing gold price. And we've got a very experienced team that have done this all before. So thanks very much for your time, and I'll leave it at that. Come and see us at the booth, which is just outside when you leave. Thank you.
Thanks, Gareth. And that's booth 88. Thanks, guys. That wraps up session 3. Thank you very much for coming.